Welcome to the Weekly this Friday, the 3rd day of September. My name's Jessica Amir, a senior market analyst with Bell Direct. Well, this week, the Aussie share market traded cautiously as a tug of war between the good and the bad took place. Now, the chart shows the market was flat for the week through Monday to Thursday. The market traded also below its key 15-day moving average in orange and below its 30-day average in blue, meaning volatility may increase in the short term. And toward the bottom of the chart, you can see a technical indicator called the MACD. This is reinforcing that the share market could lose a bit of momentum. So what was the tug of war in markets this week? Well, on the positive side, firstly, we had better than expected economic news. June quarter economic growth up 0.7%, beating expectations thanks to a huge jump in consumer spending and construction. Secondly, also a huge positive, 12.5 million Aussies have received their first dose of the COVID-19 vaccine, with the nation just 2 million people away from reaching 70% first dose. And thirdly, also locally, investment analysts upgraded their earnings forecast for the years ahead, as they generally do at the start of the month. Citi analysts believe the most upside is set to come from industrials, the only sector likely to see double-digit earnings per share growth in FY23. And we know forward earnings drives share price growth, right? So keep that in mind. The fourth positive for markets, we had the US Central Bank come out and say the fiscal stimulus punch bowl is not going to be removed anytime soon. And amid the tug of war on the negative side, putting a cap on markets, we have firstly investors factoring in that we're going to see an ugly September quarter with GDP to fall as much as 3%. That's according to Citi, which will unwind all the growth this year. Secondly, building permits fell more than expected on a monthly basis in July, falling for the fourth month after stimulus was wound back, meaning this could affect the September quarter GDP as well. And thirdly, a lot of companies went ex-dividend this week, seeing investors take profits and put pressure on stocks. Keep in mind that many companies are also going ex-dividend next week, such as ASX, RHC, AMC, ASB, MPL, SEK and WTC, just to name a few. But once again, if we step back and look at the bigger long-term picture, we know the reopening of the economy and government support is supporting the market's move higher. But technical traders and investors are still a bit cautious as the market looks to be getting closer to its 50-day moving average. This is another warning bell that the road ahead could be bumpy and reflects rising COVID-19 cases. But if you're looking for growth, you're in luck. The risk on environment is back. And we saw that this week in the sector moves. This week, the Aussie tech sector continued to make a comeback, up 2% Monday to Thursday as pro-growth sectors came back into fashion. Real estate is also doing well, as is telcos, energy and industrials. It's also worth pointing out, utilities fell about 3%, weighed down by AGL's stock falling over 6%. So why did AGL fall so hard? Well, the company, remember, it's restructuring ahead of demerging its coal business and flipping that into another entity in 2022. As for a wrap up of the big moves of the week, the focus was on growth sectors like commodity stocks and COVID-19 recovery companies. On the commodity front, alumina, AWC, rose 12% after the aluminium price rose to a 13-year high, Whitehaven Coal, WHC, up 11% as the coal price surged to a record high amid soaring electricity demand in China. And South32, S32 is the ticker. They benefited from a rise in these metals too, and also the rise of the nickel price to a 7-year high. While lithium commodity stocks also did well, namely Orocobre ORE, up 10, followed by Pilbara Minerals PLS. So why? Well, lithium prices have surged 15 to 72% over the last 3 months. In particular, the spodumene lithium price is up 28% over the past month. And consensus is now revealing that lithium prices are set to grow both in the near and longer term. And commodity analysts are also increasingly upbeat on the sector too. As for the COVID-19 recovery stocks, we can see funeral business Invocare, IVC, their shares did well, up 11% after reporting better than expected financial results. Moving to the All Ords, the biggest 500 stocks, a uranium stock stole the show, casting the uranium sector into the limelight. Now, Paladin Energy, PDN, their shares surged 33% to an 8-year high. Uranium is said to be one of the cleanest and most powerful sources of energy and nuclear power, and could play a key element in helping countries decarbonise. As for what else occurred this week, well, reporting season officially came to an end. A big finale it was. We learnt that of the 319 companies who reported results, most, let's call it 78%, met or exceeded earnings estimates and or guided for a stronger future. Recall that over the last 11 reporting seasons, if a company met or exceeded estimates, then their shares likely grew for the next 4 months. So this means for investors, the Aussie share market is supported to move higher from an earnings and valuation perspective. Moving to what to watch next week. On the economic news front, the Reserve Bank of Australia meets for the first time this month on Tuesday. Rates, of course, expected to remain on hold, but all eyes will be on whether stimulus will be wound back. And business confidence data is out on Wednesday. So there's plenty to keep your eye on and plenty of considerations. And that's the weekly. If you've got any questions or feedback, please leave your comments in the comment section on YouTube. From all of us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.